So hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, as we step into the Christmas weekend, the global cues are looking fairly positive. In fact, we also managed to shut shop at the day's high yesterday. And, lots of stocks, of course, will be in focus today as well. We'll be talking about all that over the next 30 minutes. And we'll also be taking up all your stock-related queries. So if you have any queries, keep them coming on our live YouTube feed. And we'll try and take them up in today's show itself. But of course, before we move forward, let's take a look at the top headlines at this hour. Santa rally resumes on Wall Street as stocks recover from their worst day since September. Third quarter GDP comes in at 4.9% compared to expectations of over 5% growth. Asian markets too open largely higher. Japanese inflation slows to its lowest since July 2022. In fact, the GIFT Nifty, if you look at that, it's indicating a higher start for the Indian market around that 21,400 mark. Brent crude stays near the $80 per barrel mark. Angola says that it will exit the OPEC, raising questions about the group's efforts to support prices by limiting global supplies. And among stocks in focus this morning, LIC gets 10 years to comply with the SEBI rule mandating 25% public float. Government grants a one-time exemption to the company. Meanwhile, Zomato has refuted reports that it has made an offer to buy Shiprocket. Well, on that note, let me first bring on board our technical analyst for today. Joining me is Raja Venkatraman, who's the founder of NeoTrader. Great to have you on the show this Friday, Raja. I can see you are in Christmas spirit as well, wearing red. It's actually a sea of red across the screen, barring the markets, and that's a good news. But if you look at the markets, Wednesday saw a sharp sell-off, and then yesterday, even though we opened in the red, we managed to recover half of the losses from Wednesday's session, right? So for this morning as well, the GIFT Nifty is hinting at a positive start. Where do you see the Nifty heading today? Do you think that was just a one-day shakeout and now the trend is on the upside?
Yeah, good morning, Nandita. So, like we are witnessing a Santa rally, the shakeout on that day was again on global cues, and the recovery once again today is once again on global cues. So, the underlying factor that continues to remain is that all of us used to say that the FIs go to sleep in the month of December, but actually the FIs have been quite active and they are awake, and they are continuing to influence the domestic trends here. So what I see overall from the chart setup is that the pullback was much wanted, right? Though I may not sound very, favorable to many of the people out there, but then at such astounding highs and a surprise rally which we have seen from 20,000 onwards, the kind of shakeout was very much possible. And that did occur to give everyone a reset of their bullish expectations, because everyone were expecting that the trends would continue forever. And the dip into the gap support region was quite effective, because it was also a planetary change which happened the winter solstice. And if you take a record, I just did a backtracking of the scenarios, right from 2020, 20th of December 2020, then 2021, then 2022. In and around this period, when this winter solstice happened, there was a correction, and then the markets have rallied up from there on. So looking at that trend and looking at what happened yesterday, and being a trend follower, I believe that this uptrend could continue. Nifty is at a much better position after coming down into the gap support of the 21,000 to 21,100 region. The recovery has been quite positive. So I think that the upward rally will continue, and we will look to test the highs of 21,600 once again. Now, it will happen over the next few days, because, again, the long weekend is coming in play. So again, we could experience some profit booking out there. But then overall, the trend seems to be more positive. And when you take a look at Bank Nifty, I still believe that until 46,500 is taken out on the downside and 21,000 is taken out on the downside on an end of day closing basis, one should continue to be a buyer on dips. So what this market wants us to do is buy some and keep some room in your capital allocation to buy on lower levels as well, because that's where the whole momentum is happening. And the mid caps and the small caps too are doing well. So I continue to reiterate that do not stay on the sidelines. Keep participating. The market continues to retain the bullish flavor, and it will continue to do so for the next few months as well.
All right, of course, the trend remains on the upside and keep some, money in your in your capital allocation to, actually buy on further dips. Hold that thought, Raja. We'll come and talk about specific stocks as well. But let me also bring on board Mithun Aswath, who's the managing partner at Kivah Advisors. Great to have you on the show, Mithun. I want to first understand your view on the market. The kind of up move that we have seen, the phenomenal run that we have seen, the Nifty, clocking new highs. Of course, Wednesday was, a correction of sorts. But Raja believes that, of course, the trend remains on the upside. What are your own thoughts on where we are headed from here? And secondly, how would you view Indian market valuations at the current juncture?
Yeah, hi. Morning, Nandita, and season's greetings to all your viewers and yourself. I think if you see the markets in the last month post the state elections, I think they've got renewed vigor because FIs have started redeploying capital into the Indian markets. I think those state elections provided some political certainty. Obviously, the general elections verdict is still out there, but I think there is a reasonable confidence that the current regime in Delhi will continue. And with that continuation, I think if you see the texture of the market, it reminds me a lot of 2003 to 2007, which was led by large amounts of capital spending. Here as well, you're seeing that the government's impetus on infrastructure, be it the railway infrastructure, roads, and ports, there's tremendous amount of spend there. And the order books of all these companies are just burgeoning. Also, I think the government has taken a lot of steps to improve the performance of public sector companies across the board. And you're seeing that reflective in the valuations and the stock prices of public sector companies. So I think this is a rally which is a little different from what we've experienced in the last 10 years. I think this is something where, you're seeing, the whole revival on the infrastructure side. Plus, you're seeing public sector enterprises, which were shunned by investors, seeing a lot more appetite because there is reasonable growth expected there. Plus, valuations are reasonable and some of them still provide reasonably good dividend yields.
Right. A lot has been said about the capex theme. But what about consumption? It is yet to take off in a big way. And in the run-up to general elections, of course, there will be, focus on reviving rural demand as well. And, going by that, of course, the rural recovery hasn't been on expected lines. It has been patchy, to say the least. So how should one really play the consumption pack now?
I think on the consumption side, Nandita, actually, we've seen reasonably good momentum on, the retail companies which are listed in India, be it the retail for jewelry, as well as, consumption, which is related to, say, the wedding season. You've seen reasonably strong numbers out there. There have been few companies who are in the apparel space also reporting very good numbers. So I think there is consumption. Obviously, the K-shaped recovery has resulted maybe more consumption on the urban side. But we also see maybe the discretionary side from the rural also picking up. In the last few months, you've seen, two-wheeler sales starting to improve. That's definitely a sign that, things are improving even on the rural side of the economy.
Right. Any thoughts on the entire QSR space, with Devyani International entering the Thailand market? And of course, QSR stocks, if you look at the likes of Jubilant Food, Devyani International, and a lot of others, there has been concern regarding inflation, higher raw material costs. And, Street has been fairly cautious when it comes to this particular space. But do you think, there will be some bit of interest revived in this space after the kind of, M&A that we are seeing in this space?
I think, Nandita, on the QSR space, the only concern I would have is only near-term valuations. But India as a market provides massive headroom for these companies. Be it the companies that you spoke about, there are others as well. On the QSR side, and the market caps of these companies are still quite small apart from Jubilant. So I think the headroom for growth is there, but there will be near-term volatility because the near-term earnings don't justify the valuations. But if someone has a longer term horizon, I think all these companies will definitely reap rewards for investors who are patient.
Right. A couple of more questions. Your thoughts on Zomato? Of course, there are reports which have been, of course, refuted by the management. Reports doing the rounds that Zomato may have made an offer to acquire Ship Rocket. Management, as I mentioned, has refuted this particular news, but Jefferies has maintained that any acquisition of this sort could put some pressure on the stock price as well, because the focus now is on core businesses, quick commerce as well. At this juncture, if Zomato were to make an acquisition like that, would you think that it would be, it would hinder the kind of profitability that it has turned to in the last few quarters?
I think, Nandita, on Zomato, they already have a large cash pile, which provides some comfort for the company. On their core business of delivery, you have seen recovery, and they are becoming profitable. Even their other business, which they had acquired, Blinkit, has reported very strong growth. And the headroom for growth in Blinkit's business, I think, is very large because it is touching categories like grocery delivery. Obviously, the margins may be lower, but the headroom for growth is massive there. So I think they're well positioned. I think they've not confirmed the Ship Rocket purchase. I think they're on a good wicket already with their delivery business of food, plus Blinkit's business on grocery, and they will enter new categories in that business as well. So I don't see any need for this acquisition. So it may be speculative in nature, but I think the company is well poised for growth. And if they continue to deliver those numbers, the market's a duopoly market now, with the only other incumbent being Swiggy. I think the opportunity is large, and Zomato is delivering reasonably good performance. And if they continue that way, I think the stock is well set for better performance from here on as well.
Also want to get in your thoughts on a Paytm after RBI's crackdown on unsecured lending. We have seen Paytm take a hit, right? But, interestingly, there are no sell calls from brokerages on that stock, even though, the target prices may have been slashed, but the view remains positive. Would you concur with the fact that, this could just be a short-term blip for the likes of Paytm, given the fact that it is focusing more on high-value loans now?
I think, Nandita, overall, if you see the texture of the market, also, you've seen, US yields come down. And when US yields come down, there's a lot more emphasis on technology stocks as well, because, their cash flows are more back-ended. And considering that, there is renewed interest in the Indian internet companies. Paytm was doing a good job in the distribution of loans, and that was a big driver. But with the RBI putting clamps on, unsecured lending, there will be, a slowdown in the momentum there. So, Paytm will need to kind of find a driver which will, grow earnings for them. That is a little bit of a challenge. And I think that's why the stock has reacted. You've also seen some of their initial investors exit. I think even Warren Buffett, who had a stake, has exited from Paytm. I think there are other opportunities on the internet side which are listed. You have companies like maybe InfoEdge itself, which is a company which owns several of the listed companies. They have stakes in that. They also have core businesses like Naukri and 99acres.com. They also incubate several startups. So maybe that's a less riskier way to play the internet space for someone who has a long-term horizon.
All right. Well, that's the view then. But Mithun, I leave it there. We're running out of time. Thanks a lot for taking out time and joining in. Wish you a Merry Christmas and a very Happy New Year.
Thank you so much.
Well, with that, let me go back to Raja and talk about specific stocks. Raja, I want to get your thoughts on an LIC, which has seen some interest and action after the kind of recovery we have seen in Adani group of stocks, right? And this morning, of course, there's news flow that it has got an extension of 10 years to meet the minimum public shareholding, ceiling of 25%. given the fact that still the kind of up move we saw has fizzled out a bit over the last 5 sessions, the stock is down 5%. But do you see the stock going up from here and perhaps testing levels of 800 in the coming weeks?
Yeah, the kind of news flows that are coming in, they are only giving signs that the overall news flow is giving some room for the prices to grow up. And the kind of recovery which we have seen from lower levels clearly indicates that there is strong buying happening here. And the kind of dips that have emerged in the last few sessions is giving us an opportunity to re-enter. So the price have come into some decent set of supports here on the region of around 750 levels. And I think that one should look at this opportunity to enter because testing 800 and beyond is very much possible. So the upward targets which I'm expecting in LIC is around 950 within the next 1 month.
All right. Of course, LIC around that level within the next 1 month. But let's quickly take up some queries on the show then. The first query is coming in on a Bata. This one is coming in from Raghav Sood. If you look at the shares yesterday, in fact, over the last 5 sessions, it has been under pressure. There's been some changes at the top. This morning there's news flow around this stock as well. We have, the CFO, I think, who has been changed. So going forward, what kind of levels will be watching out for on this particular stock, given the fact that over the last 1 month, it hasn't really been able to fire?
Yeah, so Bata has not been able to move ahead. Like you rightly mentioned, the consumption theme is yet to pick up. And surprisingly, so many other sectors have picked up. Despite, this festive season emerging, the consumption side is not able to pick up. And that's why you're seeing limited spurts in FMCG space. And the Bata is not primed to move up. And the kind of price action which I am seeing right now is clearly evident of the fact that there is going to be some profit booking emerging here. So it's best to exit this counter right now and wait for some revival above 1800 to really buy into this stock. Otherwise, it's an avoid from my side.
All right, it's an avoid on Bata from Raja's side. Hope that answers your query. By the way, the company has announced changes in the head of retail and franchisee operations. Pankaj Gupta, who's the head of retail operations, will be moving to a global position within the company, and Badri Beriwal, who's the chief strategy officer, will be given additional charge of the retail operations. That's the news flow around Bata. But let's take up some other queries then. Charan wants to know your thoughts on an IOC. Given the fact that crude prices are once again around that $80 per barrel mark, do you see some bit of pressure coming in after on the OMC basket? Because OMC shares have seen a good run, and the outlook as well on these stocks have been fairly positive going into next year.
Yeah. So with the global forces coming together to bring the oil prices down, it is only going to bode well for the OMC stock. So any dip in the big names like HP, BP, IOC should be encashed into. Now, if you really want to encash the crude oil theme, then HP is a better bet rather than IOC. If you're looking specifically for IOC, the dip levels would be in the region of around 110. So the stock has really run up sharply over the last few weeks, and I would not be a buyer at current levels. I would wait for a pullback towards 110 to buy into it.
All right, that's the view then. Next query, of course, is coming in on an ITC. Saurabh Gupta wants to know your thoughts on this stock. The stock has been stuck in that 450 rupee range now for quite some time. Raja, do you expect the stock to come out of this range, or do you think it will continue to remain in that range of 450, 460?
Yeah, ITC is one of the favorite stocks for many people. But then what you got to consider is that there are a lot of stocks that are moving up. So if you are holding ITC already, then you can continue to hold because the situation is not disturbed. But then if you want to freshly invest into ITC, there are better names. And like we discussed few minutes ago, the consumption theme is not moving much. And ITC is a much slower mover. So if you are having some capital to stow away for the next few years, then you should invest into ITC, because the run which ITC saw around 1.5 years ago, it will take a long time to display that kind of a move once again.
All right, that's the view on ITC. Trilok has written in, wants to know your thoughts on TCS and Infosys. for the short and long term? Of course, we have seen, over the last week, recently saw a very good rally come in on IT shares on the hopes of rate cuts in the US, right? But since then, we have also seen some bouts of correction. So for the short term, how would you view these two large cap names, TCS and Infosys, and for the long term as well?
Yeah. So first of all, when you're talking about the IT space, we have discussed earlier as well that these stocks, TCS, Infosys, Wipro, the large cap IT names are not doing well, and they give up some brief upside. They announce some news flows, but still they are not able to conjure up enough momentum. So if you really want to invest into the IT sector, then look into the mid-cap IT space like LTTS, LTIM, Coforge, Emphasis. So they are better names, and you will be able to get more traction into that. For example, BSoft. So the AI theme is working quite well, and those are the names that are doing well as far as the IT scenario is concerned.
All right. That's the view on the IT pack. But very quickly, a couple of more queries. I saw one query coming in on a BEL, Bharat Electronics. Yesterday, of course, the stock was up 2%, and defense stocks, there's no stopping the defense stocks, the kind of rally that has played out. Vijay Chandru wants to know your thoughts on this particular stock, BEL from the defense pack. How much of an upside can somebody expect here?
Yeah, the kind of positive news flows that are emerging in the defense space and the continuous patronage which the government is giving to the defense sector, I truly believe that one should continue to hold on to the defense stocks. Look at every dip to buy into. So if you are looking at a dip in BEL, it's quite further away towards 157 to 160. But if you're already having a position here, then continue to hold on because upward traction towards 200 is very much possible within the next 2 to 3 months.
All right, within the next 2 to 3 months, upward momentum is likely to continue. And of course, the company has also maintained its margin guidance of 21-23%, saying that it is intact. Last query really coming in from Debu K, wants to know your thoughts on a Tata Motors. We have discussed this stock at length, but any change in view there?
No, Tata Motors continues to be it comes up with some positive news. There is a up move and then it goes to sleep. So it's really an investor stock and not a trading stock. So if you are a trader, then there are better stocks that are moving up. And like you mentioned at the start of the show, the two-wheelers are doing better. So look at Hero Moto, TVS Motors, Bajaj Auto. So they are the names in the auto space that are continuing to do well. Tata Motors keeps on coming up with some news propped up by JLR, and that's what is helping the prices sustain the upward momentum in the last year. So that will continue to be the zone. And yes, the scenario is definitely positive. You can look at a price tag of 1,000 in the next 6 months. But then you got to be a little patient here. But overall view is on the positive side.
All right, very quickly, just your thoughts on a vGuard. There has been a block deal, in the pre-market, pre-open window. Are you following the charts of vGuard? What would you expect the stock to do in today's session?
Yeah, so vGuard has not been able to conjure up enough momentum. Yes, there are block deals which have happened today. But I don't think that it will give it enough steam because this stock also is a one-day wonder. So I do not want to invest or recommend such one-day wonders because our capital gets stuck in such stocks. So it's an avoid from my side.
All right, avoid vGuard, that's the call. But with that, we have come to the end of query segment. But before I let you go, Raja, what are you spotting on the charts for our viewers this morning?
Okay, I would like to recommend two stocks for trading as well as investing. One stock is Ambuja Cement. You can buy it at current levels with a stop loss at around 498 for an upward traction towards 515 and 520. And the second stock would be a buy in Glenmark. You can buy it at current levels with a stop at 815 for an upward traction towards 840.
All right, those were the recommendations coming in from Raja this morning. With that, Raja, thanks a lot for taking out time and joining in. Wish you a happy long weekend and a very Merry Christmas. Of course, I'll see you next Friday again. So I'm not wishing you Happy New Year just yet. But have a great weekend. See you again next week.
Same to you.
Thank you.
Same
Thanks
to
a
you
lot.
and wishing all the readers.
Thank
Merry
you.
Christmas.
All right, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But of course, stay tuned because coming up next is Opening Bell.